Hi, everyone. I'm Bill York, the VP of Product Development at Token. I'm a technology guy from way back. I founded an e-commerce software company. I was most recently the VP of Product at a consumer electronics company called Tile. And so I've had a lot of experience with trying to get paid online and helping others get paid. But now I'm trying to bring that experience to help with a better payment system overall. Today's payments rails are basically pretty old. I mean, that's the real foundational problem. Some of the concepts like checks have been enduring for a long time, and I think will continue into the future. But the ACH itself, most of these technologies are pre-internet. They have major security flaws. It's all built around shared secrets. You know, my credit card number, which I know and I need to give to you if I want to buy something from you, but if anybody else gets a hold of it, it's all over. So I was wondering how many people here have actually had their credit card number stolen or compromised and then had to go to all their e-commerce sites. I mean, you know, everybody, right? How many people have given their ACH credentials to, say, their utility companies so they can automatically pull the money out of your account every month? A handful of people. What we found from talking to our utility partners is that people hate that. They hate the idea of just opening, hey, you know, take the money. With no control on my part. And as a result, our partners tell us that between 60 and 80% of monthly utility payments are still done by check, if you can believe it. So we're saying that there's a better way to go about this. Many of you probably just experienced this flying here if you came in from out of town. This is how you buy internet on the plane now, right? It's a 14-field form. I dare anybody to be able to fill it out going into their wallet and pulling out the card to look up the codes and the expiration date and so on. There have been recent innovations here. Some of them are very incremental. They're basically trying to make incremental improvements around the core foundational systems, including things like tokenization, which, face it, is basically, hey, you know, let's try to cut down the number of places your card number can be stolen. Okay, well, +1 for security and fraud reduction, but sort of +0 on anything else. And then there's some pretty extreme new ideas like, hey, Bitcoin, let's just throw out the entire thing and start over. Which is really cool in many ways and certainly provides some real benefits of openness and parties just being able to conduct instant transactions at very low costs. But I think as you've seen, it's kind of -10 right now on the regulatory compliance and consumer confidence. How many people have bought some Bitcoins? How many people have lost Bitcoins, either through technical failure of your wallet or one of the sites being stolen? Okay, you're lucky. I know 2 people who've lost actual irrecoverable money that way. So the token solution is say, look, let's just start from the ground up and say, let's start with the foundation of cryptographically secure identity, on top of which we can then build an open API that anybody can participate in, using digital signatures to verify identity so that once somebody signs a transaction, it is both non-forgeable and non-repudiable, right? So both nobody else could have done it and I can't say I didn't do it later. Then let's add to that a set of powerful payment authorization rules where I get control for change. I don't just have to give you my bank credentials and trust that you'll only take the money that you said you would, but rather I can control all of that and apply that to existing financial institutions, existing balance holding accounts. So this isn't a virtual currency play or anything like that. It's about trying to bring some of those benefits to the world of, what I call real money, but fiat currencies in existing accounts where banks are a perfectly good place to hold value. And so what you get out of that then is a fast, secure, powerful, compliant new payment rail where you can use your DDA or an equivalent bank account to directly pay merchants and many other scenarios that we'll talk about to create a low-cost, high-speed system with a lot of control for the participants. We call this general idea smart tokenization, and the core of it is, goes all the way back to a token, which is a voucher. You can still get a version of this on a poker chip in Las Vegas and bring it to a bar and they'll give you a drink. It can be redeemed one time. What we're talking about is let's take an asset. In this case, we'll talk about a bank account, a DDA, but really it can be any asset, an informational asset, for example, not just a financial one, and wrap it in a rules engine lets you say very specifically what kind of access you are going to grant. I'm going to give Amazon $1,000 a month voucher to be able to bill me and up through next year. So I get to control the terms, the amounts, the duration, and so on. And what that results in is an authorization, a payment token, if you will, that I can give to the merchant, and we'll talk about how that works. And then you add a set of state and rules engines to help you manage that to say, hey, has the $1,000 been spent yet? So that's this core concept. And from this same concept, you can handle all kinds of use cases. You can say, a simple one-time payment, whether you're, buying a coffee in a coffee shop or whether you're doing a P2P to a friend. You say, look, this authorization I'm creating is for $10, it's good for 48 hours, and it can be redeemed by Steve as long as Steve signs it with his own private key and we can verify his signature. And I put that on file with my bank. And then when Steve wants the money, he just goes to my bank and says, hey, I want the $10. And the bank verifies his signature, my signature, and the rules and says, yeah, great. You can also do things like recurring payments. So, one of the big problems is pull payments, right? Well, pull payments can be solved by thinking of them as pre-authorized push payments, push payments that are triggered by the merchant or whoever asking for payment. So I can create an authorization that says I grant Spotify the rights to bill me up to $10 a month to a maximum of $120. Or I put a date range or whatever I want, and only based on redeem requests that are signed by Spotify's private key. And again, I put that in file at my bank, and Spotify every month can submit a request for that $10. And my bank will look at it and say, yeah, it's $10. You haven't billed yet this month. The amounts are okay. Bill's still got it on file. He hasn't canceled. Everything's great. Now, ultimately, we can extend this into very complex scenarios. This is sort of a future. We are not pursuing this aggressively right now, but it's good to know that any new system you put forward has a lot of expressive power. You can say this authorization is to my supplier in a B2B case that says I will pay you up to $10,000, but only upon confirmation of the receipt of shipping from our agreed upon shipping provider, and only if the shipment is happening within the guaranteed time frame that you promised me as part of our sales contract. This is all, again, based on a foundation of trust that is secured by digital cryptography. So everybody signs every transaction, every authorization, and then every other party can validate and verify that it has been signed by the appropriate party and feel confident in acting upon it. We're currently using, for the techies in the room, the ED25519 cryptographic public-private key security technology. We can talk about that more if you'd like. So let's look at token and e-commerce, because this is the use case we're going after hard because we've gotten the best feedback. Secure one-touch payments directly out of your bank account. No card networks, no anything in between. This is our esteemed leader, Steve, the CEO of the company. He's going to create a token. He's going to specify the terms, Amazon, $1,000 a month max. Put that on file at his bank using the token software at the bank. The bank will verify the digital signature of Steve from one of his devices and say, yep, he's authorized to do that with this account, and give him back a token, which really can be just a brief identifier of that authorization, which Steve can in turn give to the merchant, give over to Amazon, who then just puts it in his profile just like a credit card on file. Then he goes to shop. He says, hey, I'm over at Amazon. I'm going to buy one of those great new Amazon Echoes and check out. And Amazon says, okay, great, you gave me that payment authorization. I'm going to submit now to your bank, Steve's bank, a payment request for the $196, including tax, against that previous authorization. And Steve's bank is going to say, okay, well, I verified Steve's signature on the auth. I verified Amazon's signature on the request. Amazon was the authorized payee on that original authorization. The rules for amounts have all cleared, and Steve has the money in the bank. So great. And then we'll arrange a push of the money over to the merchant's bank account, all hopefully in near real time. So let's take a very quick look at how that might look in action. So this is the traditional, this is a mobile web payment at a new merchant. So we use Target as a model here. This is what it looks like when you're a new customer trying to buy something online. You say, look, there's the thing I want. I'm going to do buy these headphones. And you go through the checkout process. And this is, see the earlier slide about the United process. This is where the hell begins. We have to fill in, 14 fields, shipping addresses, and so on. And even after you've done that, then you have to come in and submit the various payment information, look up your credit card, look up its expiration date and its secret code, and all of that. And what our merchant partners tell us is that, especially in the mobile context, they get up to 70% drop-off rates right here. The time you got to challenge somebody to go get their credit card out of their wallet and enter it in. So that's kind of the today. The scenario where the merchant is token enabled and the customer's already enabled one of their accounts at one of their banks to pay via token is a lot better. So again, you start with the same thing. And remember, I'm a new customer for this merchant. So I don't have a presence there, I don't have a card on file, and so on. We'll talk a little bit more about this, but the technology can recognize that I am a token-enabled consumer and can offer right here, hey, would you like to pay using your token-enabled bank account? As I mentioned, these authorizations aren't just for payments, they can be for information as well. So I have earlier signed an authorization that says trusted merchants can have access to my shipping address when I engage them. And so the shipping address would be provided and could be filled in here automatically. And as you select a payment method, again, you get right here already automatically showing up is the token-enabled bank account I have chosen to provide to trusted merchants for transactions. So again, this is sort of the happiest possible case. There are intermediate cases where I might, as a consumer, say, no, I'm really going to want to go control the terms of payment at every merchant and so on. That's obviously possible as well. And then you pay and you're done. So let's talk about how the merchant goes about implementing this. So it's actually quite simple. There's two basic places of engagement. One is in the request for the authorization to bill against the account, and the other is the request for actual payment. So this is a representative, so a slightly schematic version of our API for demonstration purpose here that says this would be a JavaScript function that the merchant would add in their commerce website that would make the call and execute in the browser to say, I would like a payment authorization against Steve, whose identity is embedded by token into this web browser, so I know who this consumer is. And then identifying, not with a string target, again, that's a representative thing, but their unique ID as the merchant. And then signed with their private key. So they pass the key into the JavaScript library. It is, of course, not sent over as part of the request. It's kept local to them. But it is used to sign that transaction so that then the token software can take over and say, yes, this is a legitimate payment authorization request from a merchant. And then Steve's device will sign using his private keys the authorization to put on file at his bank and hand back that authorization ID as the return value from this call. And the merchant then tucks that away in the customer's profile on the site. And then when they want to request a payment, they say request a payment against this previously issued ID, this authorization, again identifying who they are, what bank account they would like the funds to go in, and I've picked again the happy case of a token-enabled account at a bank. The amount, the currency, a human-readable memo string that will go into the consumer's payment history to see what this is about, plus some internal information Target might want to provide to connect an internal order number with this payment and so on. And again, the private key used just to sign the transaction that's sent over. So that's part of the merchant API. There's some other calls that are related to things like requesting funds holds and canceling them and billing against them, as well as refunding part or all of a payment against a return. So we presented this concept, this technology at the InnoTribe Startup Challenge, and were awarded 4 out of 4 by the panel of judges in the 2 areas of concept and opportunity. And as a result of that, we have been now having some tremendously interesting conversations with some major banks and major merchants, which has really driven us now to a pilot project we're engaged in now to actually transfer money from consumer bank accounts to online merchants in real time. Token is a startup company. We're fairly early into this year, but the people behind Token have done stuff like this before. Steve, the CEO, is a very successful serial entrepreneur. He founded InfoSeek, one of the first search engine companies, has been working on unbreakable cryptographic identity here actually for quite a while. And over the past year or two has been looking at that applied to the financial industry. We have Yobi Benjamin, a CTO. He has years of experience and was the global CTO at Citigroup, where he had processed over $4 quadrillion worth of payments. So we really think that by taking this approach and bringing it to the market, we're offering a win-win-win for the 3 key players here, the consumer, the merchant, and the bank. The consumer gets greater control than they've ever had before. They get a great user experience of engaging with new merchants, and they get reduced fraud exposure. Merchants get significant reduction in costs due to things like fraud, as well as potentially lower costs of funds in the first place, which they certainly like. But more than that, again, that improved consumer experience can lead to greater conversion, and that really drives their business and their excitement. And then for the banks, and I don't know how many people here are represented by representatives from banks, But we heard a lot from the bank CEOs that we talked to that essentially banks are tired of doing all the hard work, doing all the heavy lifting, and getting 50 basis points on transactions, while these other companies that are out doing the specific user apps and so on are reaping the large fees. We say to banks, look, this is a way for you to step in and take your rightful place in this process and be able to offer some exciting new services and hopefully some new value for new revenue to both your consumer and your business customers. So we've been having a great kind of uptake on that story. So again, to just recap here, we're trying to say, look, these systems that were put in place 40 years ago have actually served us well, in fact, probably lasted longer than anybody thought, but there's time and opportunity based on the evolution of technology for some changes that can provide some real value. So, we're not just approaching this as a little edge thing, we're making a bold play here that says we think we can put forward into the market a technology that could be the foundation for an overall payment system, hopefully for the next 50 years. So for people who want to hear more about that, we have a little booth outside. We're happy to answer your questions there. You can come sign up at our website. We're going to be talking more about this and publicly releasing more of this as we get further along with our partners. And we're a young startup company and looking to find good people.